You've been told since childhood, save your money, put it in the bank, and one day you'll be secure. But here's the ugly truth. Saving money might be the dumbest financial advice in modern history. Why? Because while your money sits safely in a bank account, it's secretly bleeding value. Inflation is the silent thief that eats your savings alive, and the banks won't tell you this. They give you scraps, 1% or maybe 2% interest, while the cost of living rises 5, 7, sometimes even 10% every year. Do the math. By saving, you're not growing rich, you're growing poor. Look at history. In the United States, the average annual inflation rate has hovered around 3% for decades. That means if you kept $1,000 in the bank in the year 2000, today its purchasing power is closer to $600. In other words, you didn't just save money, you lost almost half of it without spending a dime. And that's in a stable economy. During crises like the 1970s oil shock, the 2008 financial crash, or the 2021-2022 post-pandemic surge, inflation spiked far higher. Meanwhile, your bank account interest stayed nearly flat. Saving money doesn't protect you from inflation, it guarantees that inflation wins. When you deposit money in the bank, you think it's sitting there, safe and sound. But in reality, the bank doesn't just keep your money, they use it. They load it out for mortgages, credit cards, and business loans with interest rates of 10%, 15%, even 25%. That means every dollar you save is working, but not for you, for them. And in exchange, they throw you a bone, maybe 1% interest, maybe less. Banks have created a system where they profit massively from your discipline, while you slowly lose ground to inflation. You're not saving money, you're feeding the machine that keeps you broke.
From the time you were a child, you were told by parents, teachers, even cartoons, save your money. Put coins in a piggy bank. Stack bills under your mattress. Keep it safe. It sounds innocent, even responsible. But here's the reality. That lesson was designed for a world that no longer exists. Decades ago, savings accounts paid 6, 8, sometimes even 10% interest, enough to keep up with inflation. Today, you're lucky if you get 1%. The world changed, but the advice didn't. Schools don't teach you about investing. They don't explain how inflation destroys savings. They simply repeat the old script, save, save, save. And most people follow it blindly, never realizing the system is tilted against them. Here's the difference between the average person and the wealthy. Poor and middle-class families save money. The rich, they put their money to work. Instead of letting it rot in a bank account, they buy assets. Stocks that grow with companies, real estate that pays rent every month, businesses that create new income streams. These assets don't just protect money from inflation, they multiply it. Think about it. While you're proud of saving $1,000, the wealthy are turning that same $1,000 into $10,000, simply because they know where to put it. That's the real game. Not saving, but owning assets that grow while you sleep. Let's make this simple. Imagine you save $100 a month in a regular savings account that pays 1% interest. After 20 years, you'll have about $26,000, barely more than the money you put in. But if you invested that same $100 into the S&P 500 index, which has returned an average of 8 to 10% annually over the last century, after 20 years, you'd have more than $60,000. That's more than double. And if you kept going for 40 years, you'd be sitting on over $300,000 from just $100 a month. That's the difference between thinking like a saver and thinking like an investor. Savers keep their money asleep. Investors make their money work overtime. Here's the paradox. Even when the math shows saving is a losing game, millions of people still do it. Why? Because saving feels safe. The number in your bank account doesn't move, so you think your money is secure. Investing, on the other hand, feels scary. Stocks crash, markets swing, crypto explodes overnight. People would rather accept guaranteed slow loss through inflation than risk the emotional roller coaster of investing. It's human psychology. Fear of loss is stronger than the desire for gain. But here's the trap. That false sense of security is exactly what keeps people stuck, while those willing to take calculated risks move ahead. Picture two people. The first saves $500 a month for 40 years. By the end, they've stored about $240,000 in the bank. Not bad until you adjust for inflation. That $250,000 feels closer to $100,000 in real value. Now, imagine the second person. Instead of saving, they invest the same $500 every month in a broad stock market index. Over 40 years, with average returns, their money grows to more than $2 million. One retires barely comfortable, maybe even worried about expenses. The other retires wealthy, with freedom and options. Both worked equally hard, both disciplined, but one played a game designed to lose, while the other played the only game that beats inflation: ownership. Don't get me wrong, saving isn't completely useless. It has one purpose and one purpose only: emergency cash. You need savings for 3 to 6 months of expenses. So if you lose your job or face a medical bill, you don't panic sell your investments. That's it. Beyond that, every extra dollar you park in a savings account is a wasted opportunity. It's like locking your soldiers in a bunker when they could be out there fighting for you. The bank wants you to save because it gives them free fuel. But if you want freedom, you have to invest. Savings keep you alive. Investments make you wealthy. Here's the bottom line. Saving money will never make you rich. It never has, and it never will. At best, savings protect you for emergencies. At worst, they trap you in a system designed to make the banks rich while you slowly lose to inflation. The wealthy don't play that game. They own assets, they invest, they make money multiply. And if you want freedom, you must do the same. Stop worshiping the idea of saving. Start learning the art of investing. Because the harsh truth is, money that sleeps will die, but money that works will set you free.